What's going on, guys? In this video I just wanted to go over how to use the TradingView platform for your desktop. I know a lot of you are starting to trade and you don't know which platform to use for your desktop, and that's completely fine. That's what I'm going to go over in this video, guys. But let's start off. I am on Google right now, so what I'm going to do is go to tradingview.com. And if you guys do not know, we use MetaTrader 4 for our mobile app on our phone. And then we use TradingView for actual desktop platform. So with TradingView, you guys can go here and you can type in any currency pair that you want. So I'm going to start off with USD CAD. We actually had some big news come out for the CAD earlier today. I'm going to show you guys how it affected the market. As you guys can see right here, we have USD CAD. I'm going to show you guys a couple of things that I use when I start trading on this platform. Overall, guys, when I start trading, what I'm looking for is the overall trend. And the way that I do that is I usually zoom out like this so I can overall get a bias on what's going on in the market. I'm actually going to delete all the drawing tools. Remove all drawing tools. There we go. So you guys can see that we are in a downtrend currently. I am looking at the 1 hour time frame. So usually what I also do when I'm looking for the trend is I usually go from higher time frames like the daily, and then I go down to lower time frames. So you guys can see we actually were in an uptrend for a while. Let's grab our trend line, draw that. Lowest point, extend in the future. Boom. So we were in an uptrend. And you guys can see what really made us go into a different trend. I'm going to show you guys right now. It's right here. Let's grab this tool right here. And what really told us that this was going to go into a sell market was this candle formation right here. And right here, guys, this candle, what it is called is a doji. Okay, so that candle that I highlighted right there, let's make it a little smaller so you guys can see. Perfect. So that candle that I highlighted right there is called a doji. You guys can see that as the market was coming up, it was an uptrend. A lot of the bulls were taking over the market for a while. It was just going up, 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 up. And then you guys can see when this candle formed right here, the market completely reversed and it started to go the opposite direction. And when we see this signal in the market, this candle form anytime in the market, it pretty much means that the market is going to reverse. You guys can see that we kind of have a doji right here as well. Boom, doji right there. See if we can find another one. Oh, right here, right where the trend started, we have another doji right there. So it's very crucial, guys, when you're trading that you're overall getting a bias on what the market is doing. You're starting off with more of a higher time frame. I honestly don't recommend that you guys trade on like 1 minute, 3 minute, 5 minute, any of these time frames. I usually use the 1 hour, the 4 hour, and the daily chart to trade on, and that's just because it's more accurate. There's a lot of confluence going on smaller time frames, like say the 1 minute time frame. Let's fix the chart for you guys. You can overall see that there's really no overall trend direction on what it's going on. And you guys can see that we kind of are in a downtrend, but it's really not clear as to what's going on. So that's why I recommend looking at higher time frames. Let's go back to the daily chart. And usually what I do is to find the trend, whether I'm going to be buying or selling the market, is I go from higher time frames like the daily chart. And I'll look at that, I'll see what's going on in the market, and obviously you guys can see right here that we had the doji form. So I can be like, alright, we're in an uptrend. We had a doji form on the daily candle and it closed as a doji. So most likely what it's going to do after that is drop after that doji form. And you guys can see once that doji form, look at the drop on that. Completely tank, guys. Me and my team actually caught this sell right here in this market. So overall, like I said, guys, we're going to look at the daily chart. We're going to go down to like the 4 hour chart, see what's going on. Okay. Boom, we could have been right here in the market where the daily candle is. And we had a lot of confluence right here. Do you see how the market, it's hitting this big point of resistance right here, guys? Right here is a major point of resistance, so we can zoom out. And what we need to do to find that this is a major point of resistance is actually go to a higher time frame and be able to look to the left. Look to the left, structure leaves clues. So you guys can see right here, previously in the past, we had some major resistance at this point in the market. Had some struggle right here that lines up perfectly right here. So as we do that, that's why we look at multiple time frames to overall get a bias on what the trend direction is going in. So right here, we obviously have the doji form that started to go into a downtrend. Then as we were looking at the 4-hour chart right here, we had a lot of hits to this point of resistance. And usually, as I say when I'm trading, guys, when you see the pins to the top, it's going to drop. You see how it hit this point of resistance 1, 2, 3, 4. About 4 times, and after the 4th hit, it tried to attempt on the 5th hit, and it just couldn't break that level, guys. It's like, all right, I can't test this level. I'm not going to be able to go up, so it completely dropped right there. So that's why it's very important when you guys are trading that you're looking at the support and resistance levels. You're overall getting a bias on what trend is going on, and also you're looking at candle formations. That's why I say the daily candle. That's why I'm saying the daily chart is extremely accurate, because you can always see what candles are forming. So when the daily candle closed on this candle, you could have seen a doji close, like, all right, well, something obviously is going to happen to the market. Let's put a sell. So what you then could do, let's remove all the drawing tools. Get this tool right here, short position. Boom. Move this over here. Make this smaller for you guys. Make this a little smaller. Alright, so you guys can see. Let's say that our entry was right here on this line. Let's make this yellow. Okay, that's where our entry was. So we have our risk right here. We're risking about 65 pips, and our reward is 123 pips right here. So we use this tool to overall see where our stop loss is going to be and our take profit. So obviously our stop loss would be at this level right here. Make that red. And our take profits would be right here. And you guys can see that as we mark that up, it went perfectly as we thought it would. It wouldn't hit our take profit right there. Didn't even test these levels right here. And the reason as to why I put my stop loss a little bit higher, not right here, I put it up here, is sometimes the market will try and test the resistance levels and go a little bit higher than it did before. Obviously it didn't right here, but as you guys can see right here, it didn't even attempt to hit our stop loss. It completely dropped after that. And this is a beautiful setup right here, guys. You could have caught 123 pips off that setup, and we actually caught over 150 pips on this setup because we entered higher right up around this range right here. But guys, if you did enjoy this video, if you could hit that beautiful subscribe button below. Also, there should be my social links below so we can stay connected. If you have any questions, concerns, please don't hesitate to write them in the comment section below, and I'll see you guys on the next video.